Good evening, everyone. How's everyone doing this evening? If you're with me, just give me a yes in the chat box. I see we have Kimberly, we have Mark, we have Bella, we have a few others with us. How are you guys doing? Wonderful, wonderful. Welcome, welcome, everyone. Okay, the others are not quite here yet, but we are pretty much 5 minutes past the hour, and I know everyone has things that they would like to get done. In an effort not to keep you guys too long, we will begin. The others will catch the replay. Okay? All right. So have a look at our disclaimer. Remember, we are not financial advisors. Everything we do here is for educational purposes. Be sure to read the disclaimer and terms and conditions on the Unit of Prosperity website. Okay? Excuse me. All right. So let's jump into this evening's class. Let me just scroll down. These are some of the topics that we've covered so far. And this evening, we'll be doing part 4 of corrective formations, which will be triangle patterns. Okay. Now, what is a triangle pattern? A triangle pattern is a pattern that is not very common. Okay. It's not a very common pattern. It is a pattern that is a bit on the rare side. Okay. So a triangle is a chart pattern depicted by drawing trend lines along a converging price range that indicates a pause in the prevailing trend. Technical analysts categorize triangles as continuation patterns. Okay, so a triangle is typically categorized as a continuation pattern, but it is not always the case. Okay, now triangles are similar to diagonals, wedges, and pennants, and can be either a continuation pattern if validated, or a very powerful reversal pattern in the event of the failure of the triangle pattern formation. So whenever the triangle pattern fails, it comes off as a very powerful reversal formation. Now, there are 3 potential triangle variations. These are namely ascending triangles, descending triangles, and symmetrical triangles. How many of you guys are familiar with triangle formations? Just give me a yes in the chat box if you're familiar with a triangle. All right, I see Kevin says yes. Anyone else familiar with the triangle formation? Now, when I say formation, it's the same as pattern, okay? Anyone else familiar with the triangle pattern? All right. So let's jump back into our presentation. All right, so we have basically 3 variations of the triangle pattern. We have the ascending triangle, we have the descending triangle, and we have the symmetrical triangle. Now, triangles have a wave count of 5 internal waves, with each wave being a 3-wave pattern. These patterns can either be a zigzag or a WXY formation. Now, typically a zigzag would be, it would carry a wave count of 5, 3, 5. We can have the ABC, which could also be 5, 3, 5. We can have the AB equals CD, which is typically also 5, 3, 5, but you have AB being equal to CD. Okay? Now, The WXY formation is going to be typically a 3-3-3 wave construction to create that three-wave pattern formation. Okay. Now, it could be a bit more on the complex side, but a simple WXY will be 3-3-3. Okay. Now, triangles and diagonals both have 5 internal waves. However, triangles typically don't have overshoots of its trend line. So triangles are more of, what can I say, perfect patterns. They look very perfect. They're neat. They're very neat. They don't have price breaking out of the trend lines that create the triangle's shape. Okay. Now we have diagonals, on the other hand, can have overshoots of their trend lines. They're still valid patterns, but they simply just carry overshoots. Now, they also have internal waves of 5, and in some cases, we can have these internal waves being 3 waves, as in 5 waves being the internal wave count, and each of the 5 waves being constructed in a 3-wave formation. We do also have certain cases where you could find a 5-wave construction inside of a diagonal. So you can have at least maybe 1 or more waves inside of the diagonal being 5 waves. Okay? So it's a little bit different from a triangle. Now, with diagonals, we can have expanding diagonals and contracting diagonals. The contracting diagonals look more like a regular triangle. We also have situations where diagonals may be considered expanding triangles as well. So various traders call them by different names. So the usual triangles that we look at are what would be considered perfect triangles, right? And we also have situations where we may have a expanded triangle, which looks like a reverse triangle, where instead of starting off wide and going thin, it starts off thin and goes wide. Okay. So you need to look out for those as well. We normally consider those to be diagonals, but some traders may still consider them to be triangle formations. Okay. All right. So how to trade a triangle pattern? How do we trade a triangle formation? To be able to trade a triangle successfully, you first need to understand where these patterns show up. These patterns typically, triangles can typically be found in wave 2 or a wave 4 of a 5-wave move. So as you guys may already understand, I've made mention of the Elliot wave theory many times. I've showed you guys the 5-wave move. A triangle can be in the wave 2 or the wave 4 of a 5-wave impulse. Okay? Even in a impulsive corrective wave, you could find it in a wave 2 or a wave 4. Okay? Now, you can also find triangles in the B wave of a 3-wave pattern formation. So you can find the triangle in an ABC move. You can find a triangle in a WXY move. So it all depends on the type of move that you're looking at will determine where the triangle is. But we know for sure the triangle will be in the wave 2, the wave 4, or the B wave. So these are the areas where you will typically find a triangle. So once you see a triangle, you should already understand what type of wave structure you're in. So the profit target. When trading a triangle, what we're looking at as our profit target is, it's based on how the triangle, where the triangle is found. Okay, so if a triangle is found in a wave 2, or a B wave, the profit target should be the length of wave 1 or the A wave. Okay, so if you guys are familiar with the zigzag or the ABC pattern, the A wave is what you're going to use to project your profit target for the triangle. If you're familiar with the 5-wave impulse, the wave 1 is what you're going to use to project the profit target of the triangle. I know typically it's taught differently. Normally it's taught that you would use the base, the wide side of the triangle, to project the profit target. From my years in trading, I've realized that it is not always the case. It is not always the case because we have so many different variations of triangles. Okay, so the wave 1 and the A wave are the waves that we use to project as our profit targets for triangle formations. Okay. If a triangle is found in a wave 4, you will also use the wave 1 length to project as your profit target. Okay. Where do we set our stop losses when we're trading triangles? We should set our stops just below or just above the current swing when price bounces off the trend line. So you wait for the price to come, hit the trend line of the triangle, bounce off it, give you a nice swing, and then you enter, you put your stop just below that swing. Okay, because as you know, typically if you're looking at a triangle, it's going to be a pattern that is very close to perfect. So once price bounces off the trend line, creates a swing, you can always put your stop loss just below that swing. It should be safe there. Okay. Now, where do we enter when trading triangles? Our entry levels should be established at the completion of wave 5, when price bounces off the trend line, creating a swing. Now we can do that for triangles and diagonals, okay? While with other variations of the triangle pattern, we may look to enter on the completion of wave 3. Because in patterns like the wedge, the pennant, they may only consist of 3 waves. So we'll be looking for entries at the wave 3 of those types of formations as well. What do triangle patterns look like? Okay, what you're looking at here, the first diagram is a symmetrical triangle. Who here is familiar with the symmetrical triangle? Just give me a yes in the chat box if you're familiar with the symmetrical triangle. I see Kevin says you really know the market well. How long have you been trading? That's a very good question. I've been trading for a very long time. Even before I started to take trading seriously, I think I've been around, messing around with this since I was like, well, I can't remember the age, but I think that was around in the 2000 something. I can't even remember. But I really started taking this like really, really serious. I think it was maybe around 2013 or so is when I really started taking this serious. After a while, you kind of get, fed up with, the 9 to 5s and the um, small businesses. And I just decided that the best thing for me was, to fulfill my trading career because that's what I really wanted. I can remember since I was at the age of around, I believe it was around, I think I was around 13 or so, when I first saw an ad on television about forex.com. And that ad said even a kid could do it. And at the time I was young, I was a kid, and I was amazed. I'm like, wow, even a kid could do it. That's what I want to be. And from that day, I've been working towards that goal. Never gave up until I achieved it. Okay, I see Kevin said 50 pips in a day, keep the job away. Oh, wow, I like that one. 50 pips a day keeps the job away. I like it. I like it. All right. So, anyone else here is familiar with the symmetrical triangle? Kevin, how long have you been trading? How long have you been, messing around with the markets? 1 year. Okay. Okay. It's a decent amount of time. It all depends on the amount of information that you take in. So, if you are looking forward to making this a full-time career, I would say take in as much information as possible, dilute that information in terms of finding out what works and what doesn't. Remove what does not work, keep what works. Okay, just make it simple. As they say, keep it simple. In trading, the main thing is to keep everything as simple as possible. Don't try to complicate things. Just stick with what is simple enough to understand and what shows you that it works. Over my years, I've discovered that the Elliott wave theory is the foundation of all price action. All price action. Doesn't matter the instrument. Instruments are just not important to me anymore. The names, Euro USD, Dogecoin, Bitcoin, gold, silver, oil, it doesn't matter. Once you understand the Elliott wave theory, all you understand is candles. You simply look at candles, you look at formations, and that's all that matters. Okay? So it can be that simple. All right, so here we have a symmetrical triangle. The symmetrical triangle is basically where you have, the triangle is not, it's not sloping up, it's not sloping down, it's just more flat. The ascending triangle is where you have and it's in an uptrend, you would have the base of the triangle sloping to the upside, whilst the top of the triangle is either flat or slightly sloping down, okay? Or slightly sloping up as well, okay? The descending triangle is basically the opposite, where you have the base either flat or slightly sloping down, and you have the top of the triangle sloping down as well, okay? So this is basically what it looks like. And seeing in this diagram where it says descending triangle, it says support and resistance moving parallel. Now, support and resistance is a very ticklish topic, well, for me, right? Because I've always told traders that support and resistance mainly exist within pattern formation. Okay, now if you understand pattern formation, you will start to see where support and resistance exist. Now, the traditional type of support and resistance is a little bit different, right? But I find it to be, it is a method that can be used, but I don't find it to be as accurate as understanding support and resistance within pattern formation. So support and resistance within pattern formation would help you a great deal. For example, in this descending triangle, the sloping trend line at the top would be resistance. The trend line at the bottom would be support. So if you're a support and resistance trader and you're looking to buy and sell off support and resistance, there's your opportunity. If you understand the pattern formation, you can be buying and selling off the support and resistance levels. Okay. For example, if this is a descending triangle, you're expecting the price to break to the downside. Once you see 1, 2, you got 2 swings. You got your first high, you got your second, you got your first high, you got your second low, right? The next time price comes up, you're looking to sell, right? You're looking to sell right when price comes to that trend line. Now, in some cases, you may not have been able to establish this trend line. Again, you may need for this third wave to come up and then come to the bottom, creating a triple bottom, and you have basically, let's call this a double top, right? So once you get a bounce to the upside, you're looking to sell off this established trend line. Now, typically a triangle has 5 waves. So this is 1, 2, 3, 4, 5. So wave 5, you're selling off that. In a wedge, you're looking at selling off wave 3. Okay. Now in a triangle, selling off wave 3 is not too bad either. Okay. Some traders are very good. They can establish a triangle very quickly. Okay. So we have tools in TradingView that can help you to establish a triangle very, very quickly. And I'll show you guys that in just a bit. Okay. All right. So this is basically it for triangle patterns. Let us jump over to Dogecoin. I wanted to show you guys a triangle on Dogecoin. Let me see here. Let me just make this a bit bigger. Who can see a triangle on Dogecoin? Can anyone see a triangle here? Can anyone see a triangle? Let me see here. I see Kevin says, I noticed with triangles that price may do a false breakout, fake out, and then exit in a continuation of the same direction I entered from. Okay. Okay, I think I understand what Kevin is talking about. And triangles, yes, they're very popular for that. They're very popular for giving you those fake outs. But if you understand the Elliott wave theory in a bit more detail, you will have an idea what to look out for. Okay. All right, so I'll help you guys here. So here we have TradingView giving us a triangle pattern tool right here. In your drawing tools, you also have a triangle. Okay, so you can use either or. Okay, now I'll use this one because this one actually has the names. Okay, so when you're plotting the triangle, you start at, since price is coming down, so this is a downtrend, you start at the low. So this is the low, go to the next high, then you come back to the low. So that's A, B, C, go back to the high. This is D right here. Okay, so it gives you A, B, C, D, right? So this gives you a 3-wave move and it automatically projects that triangle formation. Okay, now in some cases it may not be all that perfect the way in which that tool works. So one of the other tools that I like to use is, I use this one as well. You can use this one. You can use this to label your triangle, right? So you can use that to label your triangle as well. And the next tool is this one. I like this one best. So you find the low and the next high, and you simply project the triangle like that. This one allows you to be able to adjust it, you know, however you like, right? So this one would give me a triangle that looks like this. So I have 1, 2, 3, 4, 5. And then I could use this tool. 1, 2, 3, 4, 5. Okay. Let me just change the color. So we got A, B, C, D, E. This is basically 5 waves, but triangles are generally labeled A, B, C, D, E. Okay, we could label them as 1, 2, 3, 4, 5 as well, but typically it's labeled A, B, C, D, E. All right, so this is our triangle on Dogecoin, and this, what you're getting here, is that type of fake out that Kevin is talking about, right? Because typically we'd be looking to go short at E, right? Which is wave 5, the end of wave 5. We'll be looking to go short here. But if you understand the construction of Elliott wave formations, let me just take this labeling off. If you understand the construction of Elliott wave formations, you will see that this wave right here, let me just bring on my, oh, 1 second. Okay, I need to have that tool enabled with this version of Zoom. Okay, so I'll have to use the one from TradingView. Okay, I'll use my brush from over here. So this wave is too sharp. So this would be an impulse, a corrective impulse because of how sharp it is. It is not a nice 3-wave move. So that would tell me that this 1, 2, 3 is going to give me another wave like this. So this one comes down, and then this wave has to repeat itself to complete the formation. So that's what they did to us, causing us to get what we think is a fake out. But really and truly, it's not a fake out. It's just a complete wave. Okay? So that had to happen to complete the 3-wave formation. Now, once you see the shape of the triangle, in a lot of cases, you're going to start thinking that you're going to get the breakout. You know, once price bounces off the trend line, it's going to start making its way to the downside. But this 3-wave move was not complete. And that is one of the reasons why we had this push to the upside first, then price moved down. It's what we call a trap. In a lot of cases, you get a trap. Okay? But a lot of traders are going to get trapped if they don't understand wave construction. So you need to understand wave construction to determine if you're going to get a fake out, or if you're going to get what some traders call a stop run, or if you're going to get caught in a trap. Okay? So this is why that happened. Let me see here. I see Bella says, can you use both? What do you mean, can you use both, Bella? Both of what? Both Elliot and triangle? Oh, you want to use both the Elliot and the triangle tools? This one? Yeah, you can. You see, the Elliot is more just to help you. So this would actually be here, right? So this triangle would really be a diagonal, not really a triangle. It would be a diagonal formation. So that'd be 1, 2, 3, 4, and this is 5. So this triangle starts off as a triangle that looks next to perfect, but it's a diagonal formation. And one of the hints that you can get is when you notice that there is an overshoot. See this over here, there's a little overshoot. It's wicking out of it. So once you see it's wicking out, that is an indication that it's not a triangle, it's a diagonal formation. We can still call it a triangle because it's very, very close to a triangle, but it's actually a diagonal formation because there is an overshoot, and triangles typically do not carry overshoots. Triangles are more perfect patterns. So this is an overshoot here, and this is an overshoot here, making that a diagonal formation. So you got to understand the wave construction. And remember I said diagonal formations can have 5 wave moves inside of them. Okay, this wave coming down here looks a lot like a 5 wave move. Okay, these strong moves to the upside, these aggressive waves can also be 5 wave moves. So remember, triangle formations only consist of wave constructions being 3, 3, 3. Okay, so you got 3, 3, 3, 3, 3. 5 waves, each of them being in 3-wave formations. So anytime you see that there is a 5-wave move inside of a triangle, you're looking at a diagonal. It's not a triangle. Okay, it may look like a triangle, but it's not. It's a diagonal formation. Any questions? Let me see here. Tools, yes. How did you spot it? What was the tell? Um, would you have known what came next? You see, let me see here. How would I spot a triangle? Okay, look at this piece of price action that's happening over here. Um, I'm not saying this is a triangle, okay? But I'm saying one of the things that you can do to help you spot it is like, you see, price is kind of taking on a shape that looks similar to a triangle, right? So what you can do is you can use this same tool, this same one over here. This is most likely the one that I use in a lot of cases because it's easier to manage, right? So I got my low, I got my high, and I simply project it, right? And I projected something like this, right? So this would be sort of a triangle type formation, right? And if we go back to what our triangles look like, you can see that it's very similar to what I'm looking at, okay? So if I go back over here, I can say that this is a triangle formation, potentially. So we got 1, we got 2, we got 3, potentially 4. Just tighten it up a little bit. Good. So we got 1, we got 2, we got 3. If this one comes down, hits here, that's 4, goes back, hits here, that's 5, and then we'll expect it to come down. Okay, but that's just me trying to force this into a triangle formation. So it could be a triangle, it could be a wedge, and it comes breaks to the downside or breaks to the upside. Typically, I would say that this one is going to break to the upside. Okay, it's most likely going to break to the upside, but we will see. With these types of patterns, it's a bit difficult. Now, the reason why I would say it may break to the upside is I would look at this and I would say, this is my sloping trend. I would take this, I would put this here like that. Okay, and this would be a flag formation or a range. And I would simply look for price to bounce off this trend line to the upside, giving me another move that looks more like this. Right now, project that potential profit target right here. Okay, back to the high. When the price gets back to the high, I would expect this area to be my resistance. And then I would take this line, I project it down here like that. And then I would expect price action to come in and form something like this. So we got 1 down, impulse. We got 1, 2, 3 up. And then we get another 1 down like this before we push back to the upside again. And that's how I see price action. I just take the patterns and just put them together. I construct them as we go along. So the more patterns you know, the more patterns you understand, the easier it's going to be able to construct these formations. Okay? The easier it will be able to identify whether a triangle is going to be valid or if it's going to be um, invalid. Okay? Let me see here. We have, let's see here. How did you spot it? What was the tell? Okay, okay. Can you please do it with pound USD? Okay. So can you determine how high Dogecoin will go? Okay, how can I determine how high Dogecoin will go? Okay, so I'm getting that question, how can I determine how high Dogecoin will go? Since I'm here on Dogecoin, right? Let's just clean up a little bit. Let's clean up. Let's take these off. Okay, I'll leave that. And let's look at the others. 1 second. Give me 1 second, guys. Let me just pause the recording for a bit. I'll be right back. Okay, guys, I'm back. All right. So with Dogecoin, I would look at it like this, right? This would be my high because we came down. This is my low. This is now my high. So we had a pulse to the upside. So I established this as my high. According to the Elliot wave theory, we have impulse, correction, impulse, right? So if this is my high and down here is my low, when price came up, made the high, we made a, um, a higher low. With us making a higher low, then retesting the previous high, I would look at this and project this line to the downside like that. And I know that this is potentially my range. Okay, so if this is potentially my range, the impulse will be my trend. So the impulse is telling me the direction of my trend. So the impulse says the direction of my trend is up. So now all I'm looking for is a complete formation to go upside. Now, price action is a bit, how can I say, it's a bit complex, yes. And so we could find ourselves, since this is a 1, 2, 3 wave move, this is a complete wave. This wave to the upside could also be one complete wave. So this wave could be a measured move of wave one, like this. That one has the potential to do this. So if I see that we don't get this wave coming back at this point, then I'm going to expect that potentially what I can find is this wave coming over here. And if that happens, this could simply just be 1, 2, 3, because this wave is a lot weaker, right? So this wave is weaker. And since this wave is weaker, this could be, let's see here, 1, 2, and this is 3. So this is a 3 wave move up. And we could be building something that looks like this. 1, 2, 3. Correction. So this is one down, 1, 2, 3 up. Pulls back here. Gives me another wave like that. Let me just measure this one and project it. Potentially give me another wave like this, right? You see where it ends? Right here. Okay. So that would be 3 waves up. So this is most likely 3 waves as well. So 3, 3, 3. And then price could fall again, or price can give me this. This wave can come back at that point. So that wave can come back like that, potentially. And if that wave comes back like that, what I can have happening next is it could take off and go to the upside. Or what can happen is we can now get another wave like this. We get here, we go back to the downside. So a lot of variations. You just have to construct the waves step by step. So you go wave by wave. That's how you trade, wave by wave. Now, in corrective formations, they can always evolve, right? So you can be looking at a corrective pattern and it can evolve right before your eyes, okay? Because there are different types of price formations that can form around the same area. So you need to be very careful with that. So it's not just doing your analysis and forgetting about it. You need to pay attention to how it unfolds because it can evolve. Okay. I see Bella's asking, um, so do you play it safe? Do I play it safe? It all depends on what your idea of playing it safe is. So once I find a pattern formation that gives me a lot of conviction, then I'll enter. So in my view, it does not really come off as me playing it safe or not playing it safe. It's just a matter of looking for the best entry. So the best entry in my view is a complete pattern formation. So for example, right now, if I see this, let me just I'll use the brush instead. If this does one like that, so I have this wave, it gives me one, two. If this wave was already complete and this starts to come down, it is still a good pattern formation. And this one can come all the way down here. And if it comes down there like that, then I'll be looking for a buy, right? Now, if that does not happen and the price breaks and comes all the way back to this low, it doesn't change much. It just means that I'll get the buy from here, right? And if that happens, if I get the buy from the bottom, then I'll be exiting in this area. And from that area, I'll be looking to go short. If I have three waves, let me just go back and try to make it look like three waves here. If I get one, two, three like that, I'll be looking to sell in this area. If it doesn't go down, it gives me a correction and I get one more wave up, I'll be looking to sell from this area. Why is that? Because we have flat pattern formations, which is 3, 3, 5. We have WXY, which is 3, 3, 3. So if it ends in 3, it's coming down here. If it ends in 5, it's coming down here. Okay? So we can have a flat pattern built off of a WXY formation. You can have a flat pattern built off of a 3, 3, 5 wave construction as well. So there are variations. You just need to understand them. Right, let me just clear off all of these drawings. All right. Now, someone was asking me to look at, Bella says, I heard you are the prophet. Well, that's what they call me. They call me the Pip Prophet. I guess the name came about from being able to predict where the price is going to go beforehand, and a long time before, being able to predict sometimes 2, 3, 4, 5 moves ahead. So it's all a matter of understanding the wave construction. You guys, I'm sure, will get to that point very soon. All right, so Bella was asking me to look at pound USD. So let's see. Pound USD. Okay, we're looking for a triangle formation on pound USD. Let's see if we can just scroll through, see if we find one. I don't see one so far. I don't see one so far. We're looking, but I don't see one. Okay, this here looks very, very interesting. Okay, so let's look at that. That piece of price action looks interesting. So if this is the high, 1, 2, 3, this is the low, and we got this. All right, let me try to, good. We got that. This is 1, 2, 3, 4. 1, 2, 3, 4. So this one would be more of a diagonal. if we did it like this. We'd get one. Oh, this one didn't quite touch here, right? So diagonals kind of have overshoots. So this could look like this. Some traders draw them differently by, instead of using the wicks, they use the body of the candles. They don't draw on the wicks, okay? So it all depends on what your view is. So this would be a diagonal, which is very similar to a triangle, okay? So this is 1, 2, 3, let's see here, 1, 2, 3, 4, this would be 5 here. This one pushed up, but it pushed to the downside. This is like a failed impulse to the upside, okay? Now, if you understand the wave construction, this is 1, 2, 3, and this is 1, 2, 3, right? So this is three waves down, 3 waves up, and we go to the downside from there. So you just need to understand the pattern formations. This could also be 1, 2, 3 to the downside, and this wave to the upside could have been that final impulse to the upside, ending the wave to the upside. Instead of the impulse ending here, it ended over here. And this is 1, 2. This is, sorry, wave 1, and this is a wave 2, and this is your wave 3 coming here. Okay, so you just need to understand, the wave construction. It just made a diagonal type formation that looked like a triangle, and everyone would be expecting this to break to the upside because everyone understands this to be a continuation pattern. But this is actually not a triangle, it's a diagonal formation. Okay, it's a diagonal formation, and with the diagonal formation, it could, or a pennant, they could break in any direction. So this could be a pennant, this could be a diagonal, and they break in any direction. If it's a diagonal, it's supposed to have 5 waves within it. So that would be 1, 2, 3, 4, 5. This one has one more wave. So no, this is not a diagonal. This would be more of a pennant type, wedge type formation. Okay, all classed within triangles. So this is one that we can look at. So whenever you find a triangle formation, do your best to try to understand the wave construction. Do your best to understand if there are overshoots. If there is overshoots in a triangle formation, it's not a triangle. It's a diagonal, it's a pennant, it's a wedge. It's one of them, but it's not going to be a triangle. Okay? So this was a good one. Let's see if we find another. Here's something here that looks interesting as well. I'm going to draw it like this. This is another formation that, if we can do it like this, right, to make it more like a diagonal formation. Right? A lot of traders will look at this type of price action and they will say that this is an expanding triangle. So 1, 2, 3, 4, 5, it pushes down, then pushes back to the upside. So this is the type of thing that, a lot of traders would say that, it broke down, but it pushed back to the upside, faking you out. Then it pushes down again. Okay, so you got to be careful with this. If you just try to expand that, and this is one of the reasons why it's good to expand your triangles. Instead of just trying to leave them small, it's good to try to expand them. Okay, so don't just leave them, especially when it's expanding triangles like this one. You want to make sure that you push it out. Don't just make it small. So this could be 1, 2, 3, 4, 5. Yes. So this is a diagonal formation, actually, an expanding diagonal formation. because as you can see, I can count 5 waves within it. Let me just use the Elliot wave count. So we have 1, 2, 3, 4, 5. Right? So we have 5 waves inside here. 1, 2, 3, 4, 5, and then price goes to the downside. Okay, so that's another one. And this would be a continuation formation because the trend is down. So wherever the price is coming, entering this type of triangle type formation, that is what the trend is. So the trend is going into the triangle, it's a downtrend. So you'll expect the price to push down on the completion. Let's see if I can find another. Okay, instead of doing this, let me just use the trade finder. So I already set up the trade finder in such a way where it could be looking for wedges and triangles because the trade finder is coded to look for wedges and triangles for you guys. Okay, so let me see here. Let me see here. I'm looking at some comments. Okay, I see Bella was asking, Bella was saying I'm going the wrong way. What do you mean I'm going the wrong way? Am I going in the wrong direction on the chart? What do you mean? Um, Bella was also asking, what do you do in that situation? Okay, I did not see the comment fast enough, so I'm not sure what point you meant. Let me see here. Bella says, how do you set up? But what about right now on pound USD? Can you take a peek for the next move? Okay. To the right. Okay, so you want to go to today, pound USD. Okay. All right. So what's happening on pound? Right now we have an incomplete formation, but because I have, let me see here. This is not quite a retest, right? Because if I draw my line right here, make this bigger. If I draw my line right here, you can see clearly that this low did not come and break this one or match it. It came very close. So this still has the potential to be 1, and this could be 2, and this is definitely 3, right? So this is a 3-wave move up. So it still means it's corrective and the price should be coming back to the downside. So if this is 3 waves up, and this also looks like 3 waves right here, so this move definitely is corrective. We got this sharp move down and we got this push up. With me getting this sharp move down like this, it's either going to tell me that, let me see here, these two are going to match each other like that, making this a 1, 2, 3, making that a flat. And this would still be 3 waves, 1, 2, 3, like that, right? So this is 3, this is a flat, and this is potentially going to be maybe a 5-wave move or a bigger 3-wave move, okay? So the entire move, no matter how I look at it, is still corrective, which means this price is expected to come to the downside soon. Now, this is on a lower time frame. If you look at this on a higher time frame, let's go to 4-hour. You look at this in the 4-hour time frame. This is an aggressive move to the downside. And this was a 5-wave move to the downside, right? So with me getting this 5-wave move to the downside, this It looks more like a three-wave move to the upside. And I'm now getting this aggressive wave here again. So this would, I would look at this and say this is a flat pattern formation like that. This wave is a bit short, but we can have a truncated wave, okay? So this move is more or less just a flat pattern formation. So this is a running flat. Potentially, this is a running flat. So I would expect one more move to the upside. If I'm getting one more move to the upside, I need to understand the entire wave, right? So this is also 1, 2, 3. That's a flat pattern here as well, right? Look at that. These are corrections, okay? So once you find the corrections, you're going to understand, have an idea, at least a good idea what's happening. So this was the impulse, correction, impulse, correction. So you have to expect another impulse to the upside. Now, if you look at the major high, this was the major high over here. You draw a line going across, right? Take that line, copy, bring it down to the low. At the low here, we have a double bottom, right? Now, because we have this as a double bottom, it's telling me that the price will be expected to come back to the downside. I expect this price to come back here, right? So if I'm getting this move going to the upside and it's moving 1, 2, 3, 4, potentially 5 waves to the upside, because we could get price moving in a 5-wave move. And this is typically what I consider to be an X wave, right? And if this is an X wave, this is most likely going to be a WXY formation. So W, and this is going to be my X around here, and then this is going to be my Y. Okay, coming back. So I'm going to expect this to hit this top, and then I'll expect it to come back to this bottom. Once it comes back to this bottom, after that, I will expect another move to the upside. Another move to the upside. Okay, then I have to understand, for this move going to the upside, I need to understand how far can it go. So for me to understand how far it can go, I need to understand the entire pattern construction. Okay, now looking at this, it's starting to look even more interesting. So we have pulse, we have a correction, pulse, we have a correction, pulse. So I can look at this as 1, potentially 2, this is 3. I can look at this here as well, like that. And I can say this is just a big running flat formation. Okay? And if this is just a big running flat formation, then this wave could be the one that's repeating itself here. Because it's coming so weak, this could typically just be a truncated wave that's coming. So if this is going to be a truncated wave, we will start making a bigger move to the downside. If we go to a higher time frame, this is just going to become a bigger flat pattern formation. Right? So we take this, project it to the top, and this is just a bigger flat pattern formation. So this move is going to be expected to come down anytime from now. Based on what I'm looking at, we could potentially hit the top. We could even break the top and then make our way to the downside. This looks like a big flat pattern formation, okay? And potentially could be looking to move to the upside in 5 waves. So if we look at that, and just to try to count 5 waves, this could be 1, 2, 3, 4, and this could be 5 right here. And then we come down, okay? And if this is going to be 5, this current wave that we're in, Let me just go to a lower time frame. Right, so if this current wave that we're in is going to be 5, let me see here. Let me try to see if I can get 5 out of it. We got 1. This is 2. Did we break the low? Let me just take off the drawing tool. Okay, let me just take that off 1 second. Let me just try to see if we broke the low. It looks like we did. Okay, yes, we did break the low. Okay, so because we broke the low, this can't be 1. So this is going to be, from here, this is 1 wave to the upside. And because we broke the low here, this is just a corrective move to the upside. So this is going to be let me see, 1, 2, and this is 5. So this is a 3, 3, 5. So this move from here going up is expected to be in 5 waves. So then this is going to be wave 1, wave 2, wave 3, wave 4, wave 5. Okay, so that's what I'm looking for. So wave 5 could end here, or it could end here. Either or. This area or this area, it could end right now. Okay, so you just got to be on the lookout. If this wave 5 ends where it is right now, what would be a good signal to let you know that it's done is if it comes back and breaks this low. So let me just remove some of these drawings here. Good. So if this wave comes back and breaks this price, which is 1.441 approximately, then you can expect price to start moving to the downside. So let this be your termination zone. Once it comes down, breaks this level, it means wave 5 is complete, and we're going to start moving to the downside. Okay? All right, let me see here. So Bella, any other questions? Okay, Bella says thank you. All right, no problem. Just let me show you guys the trade finder really, really quick. All right, so we just got something coming in on New Zealand Swiss. So let's take a look at that. Okay, look at this. What the trade finder does, it looks for potential triangle formations, right? So keep in mind that it's not all going to be perfect triangle formations. It's looking for potential triangle formations. So you need to understand what a triangle formation actually looks like, okay? So in some cases, you may need to even maybe reconstruct it yourself just to make sure that you get it right. All right, so this one is not a triangle. Let's see. This one is also not a triangle. Could be considered a wedge. This one could be considered a wedge as well. Very similar instrument. Same here. Could also be considered a wedge formation. Okay, let's see. Okay, this one would not be a valid triangle. No, as you can see, it's not even It's not drawn properly. It's different. It's not a right. It's not correct. Okay. Let's see here. So this is a great tool to help you to find triangle formations. It does it for you. So as you can see, it started looking for it here, but as you can see, it was not a complete triangle formation. You need at least 5 waves inside of it to be a complete triangle formation. If it's not going to be a triangle, you're potentially looking at a wedge or a pennant of some type. This is also not, let me see if I can, also not a valid triangle formation. Okay, a lot of traders look at this type of price action and they call it a wedge. Right, so they consider this to be a wedge, profit target from the low back to the high. Okay, and this one played out quite nicely, except, if you look to enter on the breakout or the retest, it comes here and it goes right back down here before it goes up. Okay, so you got to be aware of that. All right. And you still also need to be aware of the Elliott wave formations, because this is clearly playing within the Elliott wave formation. This is a flat that's happening right before your eyes, right here. Potentially a flat pattern formation in the making. Right? And you got your impulse up. You got 1, 2, 3. This is your correction. And then you got your next impulse to the upside. Okay? So you got to be aware of that. That's why the price is moving up, and that's why it pushed down. So even if you look at this as a wedge, you need to understand the Elliott wave theory, because the Elliott wave theory will guide you accordingly. A lot of traders are looking to buy the breakout or buy the retest. And if you look to buy the breakout or you buy the retest, yes, you get a little bit of profit, then it goes against you. By the time you see it going against you, you may panic, you may exit, and then it goes in your favor. That is simply because you don't understand the Elliott wave theory. You did not understand this as an impulse. This is a 1, 2, 3 wave correction, and you're going to expect another impulse to the upside. So in a case like this, your target 1 could have been right here. And all you could have done was measure the first wave and project that over here like that at the end of the third wave of the correction. And this would have been your first target. Okay, so you could have exited here and then look for a reason to go short or look for another reason to go long. Now, since the price is moving to the upside, you look for a correction, break out of the correction, you buy. It reaches the top here. If you're looking at the traditional type wedge formation, gets back to this high, you exit. You wait for price to give you a reason to sell. So it pushes down, you look for a correction. Once it does not break the high, you could be looking bearish. So you could do 1, 2, 3 and move down. If it's going to move back to the upside, it's most likely going to give you this length like that. Would stop here, push, give you a pulse to the upside, correction, and then take you back to the upside. So you need to understand the various types of Elliott wave formations so that you can trade effectively. If you don't understand all of your different corrective formations, it's going to be difficult because price action is built off of various patterns being put together to create a whole. So you've got to be able to put the blocks together to understand what's really happening and to be able to predict what the next move is. The blocks are simply pattern formations. You've got WXY, you've got ABC, you've got triangles, you've got the Elliott wave, 5-wave impulse. They're all constructed using other pattern formations. Okay? The Elliott wave, 5-wave impulse is constructed using the impulse waves. with the corrective waves. So if you understand what the impulse looks like, you simply just look for a strong move. Once you get a strong move, you need to look for a correction. The correction is the difficult part because the correction has many variations. So you just simply need to allow one of those variations to complete. It's either going to be a triangle, it's going to be a flat, it's going to be a wedge, it's going to be diagonal, it's going to be some sort of corrective formation. Allow it to play out. Once you can identify that corrective formation, then you can get involved in the trade. Okay. Um, I see Bella's asking, do you use Scalp King? Okay, well, I've been away from Unit of Prosperity for about, I think, 2 years or so. So I'm just back. I haven't messed with all of the tools yet. I think Scalp King is an EA, correct? It's an automated trading robot. Am I right? Kinda. Okay. It's probably semi-automatic, I assume. Well, I've not used it as yet. I've not used it as yet. Okay. Wonderful, wonderful. Well, just to show you guys, look at this. I projected this move to the downside, and as you can see right before your eyes, it's starting to come down. All right. So once it gets to this level, what do you think you're going to do next? You're going to look to see what happens here. Is it going to bounce back to the upside, giving me something that looks like this? It's going to come down, bounce up, and gives me a correction. Once it gives me this type of correction, I know I'm going to take it back to the upside. Okay. But if it does not give me that type of correction, let me see here. Let me try to erase some of this. All right, so if it does not give me that, and it comes here and bounce, oops, it comes there and bounces up like this, comes back and retest, giving me this type of formation, then what do you think I'm going to do? I'll look for the sub. Okay, so this would be 1, this is 2, and this is my 1, 2, 3, 4, 5. This is going to be my wave 3, and then I'm going to expect a wave 4, and then a wave 5, like that. Simple. Okay. Now, another thing that I need to mention to you guys, triangle formations when found in a wave 2 would mean that you're in a corrective formation because a wave 2 would either be a B wave or it's going to mean that you're in a 5-wave move, but it's corrective impulsive. So at some point, that wave is going to complete a bigger correction and price is going to go in the opposite direction. Okay, so you just need to make sure that you understand, the various rules, keep them in mind, understand the construction of these patterns. The more patterns that you understand, the easier it will be for you to dissect them. All right, so guys, we're out of time. I'll let you guys go for now. I'll see you guys next time. Thank you so much for coming. It's been a pleasure as usual. Bye-bye for now. Have a wonderful evening, guys. I see Bella says, thank you for your dedication. You're most welcome, Bella. Most welcome. Thank you so much for participating. And I know all of you guys will become good traders. Practice, practice, practice. That is key. Okay? Practice. Take in as much information as possible. Analyze it for yourself. Make sense out of nonsense. As I've been told a lot of times, you need to try to make sense out of nonsense. So anything that does not make sense to you, look into it, look deeper. Try to understand why it is what it is. And if it doesn't work, try to understand why it doesn't work the way it should. And eventually everything will start to unfold. Okay? Thank you so much, guys. Bye bye for now.